Oh, good evening, folks. It's Shooter, Scott Henderson. We're going to go over a few charts, see if we can figure out what's going to happen in this market. All right, let's start off with the SPY here. Of course, at the end of our presentation, please do review our disclosures so we stay compliant. Our main trend support is way the heck down here. Now, we've got this retracement box, which is coming in down here between, roughly 510, 515, and 440. So it could be anywhere in that range. The 236 is the most likely because let me just pull this trend support up here. Currently, this is our, let me just get a new one, quicker and easy. So either we're going to come in and this trend support holds or this trend support holds versus the larger trend, which basically dates back to March of 2020. Notice the difference in there. And notice the confluence between where that price point is down here. So now we still have an upside level potentially to 632.93. At this point, we've got two inside bars, our weekly. Now, looking at the daily, it's giving us a much shallower box to the retracement, which is sort of my thought, with how this has been euphoric. This is an overshoot. So drive one, drive two on this trend. Drive three, clearly all the time can be an overshoot. RSI doesn't give us any conviction here. We had our confirmed low here and a divergent low here on this leg. So we really don't have any confirmations that this is going to end here. It more than likely extends. At least that's my 2 cents at this point. I reserve the right to change my opinion. All right. Let's jump to the NASDAQ. We have a much shallower retrace that the NASDAQ is showing here, roughly from 494 down to 467. However, note we do not have any alternate count to the upside for this to break back above. However, we get above this 540. It is not easy doing a presentation on a 40-inch screen because I can't see the left corner where all of the indicators are. So roughly 539.15 is our prior high. We close above that, we might edge up just a little bit. I don't believe that's the case because we've kind of stalled out in this Santa rally, but our speed line up here could take us up to 620. To the upside. The only downside with that, from my view on that, is that sort of reset here. So that's a more likely trajectory, I would think, at this point. So that would take us up maybe to about 565 to the upside, is my thought on the NASDAQ. I think this retrace holds. We got a breakdown here. We break below, SQQs actually work pretty good. I closed them out because I want to take the profit because I had a decent profit when we took those last week. But our trigger is going to be about 509.03. So we break below that. That opens a shot at 495 or lower. So that would be where I would add SQQs or add QQQ puts, for a little insulation. Now our fib levels off of wave 3. Obviously, this was really shallow. If we're going to sell, we could get this over here. We could get it. I'm not saying it's not, because the structure is there for this kind of retrace, which we received in the November 21 sell-off. So my thought is that we continue a little higher and then we get a little more euphoria to the downside. We're going to need a catalyst for that to really push for us to the downs. Just my 2 cents there. All right, let's take a look at TLT. Now I've got a bunch of lines down here. Now this is our buy the dip band for May of 2004, the lows, which is roughly between 81 and 80.55. However, notice where our speed lines are here. So this out of the three, I structure, I look 3, 5s, and 8s because Elliott wave patterns and how they continue to repeat in different stages of the wave. So either this was our bottom and this is a head and shoulders, left shoulder, head, right shoulder, and then we go. Right? Or this is a 3 drive to a bottom, right? Now, structurally, RSI confirmed on this low, divergent low. So again, that supports a drive 3. Whether we take out this 80 or not is really going to depend on the yield. There was some talk of 7 or 10%, and that's going to decimate emerging markets. Just looking at that, this is a bigger event than the Great Recession if they lose control of this. So that's something we want to keep a close eye on. I am not long TLT here, and a lot of that has to do with these candles that are here. I took my poison. This is my nemesis because it's hard. It's very hard to predict how the Fed's manipulating this. So, but notice we got 4 candles here. We've got 4 candles here, and our selling has waned a lot versus what we had here. So this last bit of selling is pretty much over with, it appears. Then we came in, we had a really nice push. So we had a push that is 82 to $100. So it was an $18 push off those lows. In addition to that, we had a 91 to a 109 push, so a $10 push here. I would like more of a cascade though. This is still, in other words, this is the beginning of a leg down. This is a continuation. Once you got, equality would have been right here about 132. Extended corrective leg would have been about 122. And the elongated leg we got was like 108, and then we continued one leg lower. So just the trajectory and the slope, it's not as steep as we are here, but it's not waning, slow bleed like we are here. So this could accelerate pretty quick. So if we wake up one morning and we're below $80, that's where I would start scaling into. All right. Let's take a look at a few sector ETFs. All right, let's look at XRT, which is retail. Retail did pretty good. Sales were up 3.8%. I've got 3 targets to the upside. Roughly 97 to 126 once this gets back above this mess here. Right now we have a rejection dot here on the Elliott wave strategy that I'm marking on my charts now. So I do think it has potential to head to the upside. XLY looks bearish based on this count. So, we got quite a little bit of downside. XLV, a little bullish, maybe one more leg lower to about 134. So you got this little buy zone right down here. It gets down into that range. And our target would be up here between that 150 and that 145 range as far as a back test. All right, let's take a look at XLU. A little bit of a bounce here. Again, our target range is going to be roughly between 80 and 78. XLP, a little more downside, roughly between 77 and 72 from where we are now. XLK, a little more downside as well, between that 222 and 210. XLI could go either direction here. We've got a band down here or a band to the upside, which could bounce a little bit, and then we'd get rejection, a little more downside. So this could go in either direction. However, my bias is there's not a lot of volume down here. Just they're weak. This is where our support bands are aggressively. Let's look at XLF, maybe a little bit lower as well. So roughly between 47.59, whereas about where, just about where we are, down to about $44. Now energy, looks like we pushed to the 1618 off of this ledge. Once this gets rejected up here, you break down your sell signal. You were going to take the short, would be a break below this 78. Then I would target $70 puts on that. I was going to take that short. I want to watch oil though. I just don't think that with Trump coming into office, we have that much more activity in the Middle East, since we haven't gotten it yet. Now, XLC communications has some huge upside. Look at these bands on this measuring to the, we're already above all-time highs. So this is one that they probably are going to come after, methinks, into the new year. Again, I see no reason that rotation doesn't continue. XHB, either we could do one a little more leg lower here, but no. I think we head up towards this 117 to 111 range. XBI doesn't really, biotech is sort of like, I have no projection there. In other words, it's in no man's land. So where is my buy zone on this? We're back in time. So buy zone would be between 82 and $70, which is quite a range. Have a lot of support. So we get down to this lower side of the band, then I would think about going long. We have roughly a double top in RSI based on this point here, and so I would classify that as divergence to a great degree just because of the price differential. And then notice how this is waning. So whatever this was is completely gone with this cascade down. It actually looks to me on the larger scale, and we'll go out to the monthly. You won't see me do this very often, but see what this looks like. So on the monthly, we've already rejected price here. So we've got a target that's way the heck down here. So here again, this is a head and shoulders, left shoulder, head, shoulder, heading back down. So this, we could really reject in biotech, or excuse me, in XPI to the downside. It has a potential of a larger move in that direction. And we will end with IBIT. So we, our line in the sand is this 41.99. We're bullish until that breaks. Trend support is a big factor, but we're so far above that, I don't think we get back down. So that's my 2 cents. All right. So we now have another higher slope. There's one below there, but for the purposes of this meeting. So I would say we don't get below 49. So if you don't have a position on in IBIT, that's where I would add that. So, well, great trading, folks. Until next time.